In this part, we're going to talk about the disposal of a plant asset based on its sale. So, as previously explained, companies dispose plant assets in three different ways. We already explained the retirement of a plant asset. Now we're going to talk about the sale, and we still have the exchange of a plant asset. When the company decides to sell a plant asset, it will receive a cash. However, the sale of a plant asset may result in a gain or a loss on disposal. How can we know that the sale of a plant asset was provided us with a gain or provided us with a loss? We need to compare the book value of the asset with the proceeds received, which is the cash from the sale. If the book value is less than the proceeds received, then we have a gain on disposal. If the book value is greater than the proceeds received, then we have a loss on disposal. Please open your book on page 30. Here we have an example. Assume that Fix Up purchases a truck for $40,000 on January 1, 2017. The truck has a useful life of 4 years with no salvage value. On July 1, 2020, the company sells the truck for $7,000. The first step, we need to record the depreciation expense on the date of disposal. And that for sure will be depreciation expense and accumulated depreciation. However, in the last year of usage of the truck, we have a partial year because the truck was sold during the year, and that's based on the given July 1, 2020. So to calculate the annual depreciation expense on the year 2020, we need to calculate the depreciable cost over the useful life times the number of months used over 12. So we have 40,000 minus 0 over 4 times 6 over 12. Why 6? It's from January 1, 2020 till July 1, 2020. We have 6 months were used during the year 2020, and thus we have a result of $5,000. So it's debited to depreciation expense and credited to accumulated depreciation. The second step, which is step 2, we need to record the sale of plant asset. So to determine if the sale results in gain or loss, plant assets net book value must be compared to its proceeds received. The net book value is calculated by cost minus accumulated depreciation. The cost is 40,000, so we need to calculate the accumulated depreciation, which is the annual depreciation expense times the number of years the plant asset was fully used plus the partial year depreciation expense. If we calculate the annual depreciation expense, it will be $10,000, and we use it for 3 fully years plus $5,000, which is the partial year depreciation expense. So the net book value will be cost minus accumulated depreciation. We have a $5,000 as a net book value. However, based on the given, the truck was sold by $7,000. So we have a gain of $2,000 because the truck was sold in an amount higher than the net book value. So what will be the entry? Like we explained in the retirement part, we need to credit the plant asset with its cost. We have the accumulated depreciation, which is 35,000. However, based on the sale, we received a cash amount, so the cash in the company increased. Since it increased, it will be debited, and the cash amount was 7,000. Difference between them, the debit and the credit, will be the gain on disposal, which is the $2,000. It can be calculated by cash minus the net book value. Here we have the solution for the exercise on page 31. Here is the entry. Now on page 32, we have the same example. Fix-up purchased a truck for $40,000 on January 1, 2017. The truck has a useful life of 4 years with no salvage value. On March 31, 2020, the company sells the truck for $6,000. The annual depreciation expense for the full year will be depreciable cost over useful life, so we have $10,000. During 2020, the company only used the truck from January 1 till March 31. So we have a partial year during 2020. So we have depreciable cost over useful life times number of months used over 12, and thus we will have a result of 2,500 as a depreciation expense during 2020. The net book value equal to the cost minus accumulated depreciation, where accumulated depreciation will be the annual depreciation expense times the number of years the plant asset was fully used plus partial year depreciation expense. The company fully used the truck during the year of 2017, 2018, 2019. So we have 3 full years. That's why we did $10,000 times 3 plus the partial year, which is 2,500. So the net book value of the company is $7,500. We got it by the cost minus accumulated depreciation. If you look at this amount, the net book value, which is the value of the plant asset or the truck in the company's book, is $7,500, and it was sold by $6,000. So it was sold by an amount less than its real value. And so we will obtain a loss of $1,500, which is the $6,000 minus $7,500. And the recording will be depreciation expense, accumulated depreciation 2,500, 2,500, and the disposal will be truck $40,000, the proceeds, which is the cash, 6,000, the accumulated depreciation, which is 32,000, and the difference between the debit and the credit will be the loss on disposal. This is the solution for the exercise found on page 32. And this is the entry. Now the exercise on page 34, we will have a no loss and no gain, and you need to calculate based on the same steps previously explained. So this is the solution for the exercise on page 34. And this is the journal entries.